So we have to really make sure we are assessing the risk, we're placing the risk where it belongs, and we have to let our clients know really what's happening. And it's me, Stephen Harrington Dakota, the diva of insurance and performance coach here at Agency Performance Partners. I'm really looking forward to sharing a little bit with you about our bonus content for the Hard Market Hero series on fire and coastal zones. Although we may not all live in the fire and coastal zones, we know that they exist, and we've heard stories about such beautiful places as Florida, Louisiana, Texas, and California. It's like the whole little southern coast down there. We got fire, we got wind, we got rain, we've got hail. We've got just about every weather experience possible, including thunder, lightning, and fire. We've got rising water. We've got all of the adventures. So what do we do with that? We're going to really talk and get deep into the special market that's happening. I live in Washington. Washington does have some fire risk, especially on the eastern side of the states, and rates are reflecting that. We want to really make sure that we are focusing with our clients on how to handle the market, how to have those conversations, and really think about the important question in the high risk zones. What's more important, coverage, price, or having insurance? Bum, bum, bum. I think they're all important. I think coverage is paramount. If we don't have the right coverage during the claim, we are going to be very upset with our agent or with the company that provides us the insurance. What we have to also think about is when we're only looking for the cheapest price for a customer, are we sacrificing coverage? Yes, price can be important, but what about value? I was working with an agency the other day in Florida, and they were having to make the choice of rate or roof, R or R. Do you want a lower rate or do you want coverage for your roof? Because there was an exclusion or ACV endorsement under roof for most of the policies there in Florida for the couple carriers that are left. So if it was an existing policy and they had had it on the books for a while, it was still okay with the replacement cost roof. But if they were going to one of the state plans, it would change the roof to ACV. So you have to really look and explain the coverage options to the client. But first of all, you have to understand them yourself. What good does a fire policy do in California, where we have a lot of high fire risk, if it's excluding most of the other perils that are going to be covered? We have to make sure that we understand what each policy offers. We have to understand the bells, whistles, and exclusions associated with each policy, but then we also have to be able to relay that to our client. So ultimately, what's most important is having insurance, having protection in place that's going to help us in our time of need, help protect our largest investment for many of us, and help us rebuild or restore what we previously had. There's a reason why rates have gone crazy in a lot of these areas. It's because of natural disasters and losses. In the last 6 years, there's been more than seven $20 billion plus storms, and carriers are not able to keep up with the rate. They are requesting 35% rate increases from the insurance commissioner in coastal areas. So what we have to really think about is how many people have insurance, how many people don't have insurance, and what risks are they insuring? Are they covering earthquake? Are they covering fire? Are they covering wind or hail? Are they covering flood? And a lot of times the answer is maybe. I mean, if it's not built into the policy automatically, are people going out and buying it? Are they understanding what they're getting? Are they understanding what's happening out there? Construction costs are up, I think, about 36% since the beginning of the pandemic, and that's across the nation. So our replacement cost guides are wrong. We have to be looking at all of these things to make sure we are properly responding to clients. 8 out of the top 10 fires in the US occurred in 2017, 5 years ago, 6 years ago. We are still trying to get rate and recover from that. In 2018, the Camp Fire in California had over $12 billion in damage, and moratoriums started going into place, or cancellation in areas that were higher risk for fire. So we get all of these things happening, and the limited markets that are left are trying to pick up the excess, or it's having to go to the state plan. Hurricane Ian is estimated to have cost over $65 billion, and people want to complain or get on us about rate. What we have to remember is the cost of everything is increasing. Inflation is at an all-time high. And fortunately or unfortunately, coastal and high fire is going to be hit the hardest for the moment. I think that there's some good news in that, and the fact that we've been in it longer. We have seen the trends. We know what's happening, and we could try to adjust a little bit quicker than some of the other places that are going to be caught a little more off guard. I think we also have to work with our carrier partners and not just place things with them because the rate is the lowest. I think we're going to burn market. I was talking to an agency in Florida a couple of weeks ago that had to remarket about a third of their homeowners policies twice in 12 months because they had moved things to a carrier that was cheaper. They had a carrier go insolvent, they're moving things, they went to the next cheapest option, and the market got burned quickly because everybody moved their stuff to the lowest priced option, which then burned the market when losses started rolling in. So we have to really make sure we are assessing the risk, we're placing the risk where it belongs, and we have to let our clients know really what's happening. Why are the rates changing? What is affecting them and making their insurance more expensive? We know there's inflation. We know that construction costs have risen. We know all of these things. We also understand that auto claims are down, but severity is up. To fix a vehicle now is a lot more expensive than it was even a few years ago. When we're looking at all the technology built into vehicles, a simple bumper that might have minor damage on the surface may need all of the sensors in the bumper replaced or a computer part replaced. We can end up with tens of thousands of dollars worth of damage to something that can't be seen by the naked eye. We also have long wait for parts. So some vehicles are being totaled out because they can't get the parts in. And by the time they did, they would have paid out more than the car was worth in rental car fees or other fees, or the client just can't use the vehicle. It doesn't make sense to the adjuster to keep the policy in place or keep the coverage on and not total the vehicle. We also know that construction materials are harder to get. I mean, I was waiting for can lighting for 2.5 months because there was a shortage on the brand that I had already installed in 3/4 of my house. So we need to make sure that we're educating the client, sharing the stories, and really letting them know what's happening. This is going to be a long game. We have got to provide amazing service to our clients so they aren't looking for options elsewhere. We have to also help them understand the reason that this is happening. We need to educate our client. We need to be ready for the long game. And we've got to prepare for hurricane and fire season in coastal areas. We need to share our value as an independent agent, and we need to control the whole account. So if we want to be honest, we need the entire risk insured with us so that we can handle whatever may come up. If we can place it all with one carrier, great. But even if we can't place it all with one carrier, I would still rather have it all in my office where I can control the narrative, where I can give them all the information that they need and give them the information they want. We have to be in it for the long game. We want to talk to the insured about the risk of moving with inspection. What if it comes back and the roof is older than we thought? Or what if it comes back and the risk was materially different than what the client had originally told us? Do we want the risk of moving something to have an inspection go wrong or major items have to be repaired on the home? When we move to the hot carrier, we talked about this one already, we burn our markets or we burn our underwriters. And underwriters are of the same opinion as us agents. They want to spend time with agents who appreciate the relationship and honor it. They want to work with you if you're a great partner, but they don't want to work with you if you're a horrible risk. If you throw all your crap to them and just to see if it sticks, your applications are incomplete, or you maybe don't completely fill out the application with all the truthful information. Carriers are starting to really take note of this. They're going to put their resources where it best fits them. And that's with agents that honor the relationship. They place a good risk for the markets, a good risk for the carrier, and they put it where it belongs. So we have a lot to talk about, a lot to deal with. We know the market is changing rapidly, and we want to be here for you. I'm really looking forward again to talking about more details of the hard market in coastal and fire areas and working with your agency. We can customize this program as well as many others for you. You can check out our options online at agencyperformancepartners.com, where we have virtual training, online self-paced training, we have live training, or we're available just to talk. Purchase some consulting hours. We're happy to work with you. Talk to you soon.